Press subscribe.
Press subscribe.
Press the bell.
Press the bell.
Press like.
Press like.
Change your life one word at a time.
Good morning, you. Yes, be great. You must learn the future now. Don't hesitate, don't wait. Learn the future. It's all about investing. Invest in yourself, invest in the finances, invest in the markets, and learn about investing in something higher. That's why we always start our day. Now, my daughter's not here, but we always make her start our day with affirmations, and I'm smart, I'm strong, I'm wise, I'm powerful. It's going to be a great day. Thank you, Jesus. And I hope you're keeping healthy. I've got my Iris Moss, got my C Moss. How are you guys keeping healthy? So yesterday and the day before, people were crying. The Bitcoin, let's see, was just falling and falling. Can see what took like 12 days to make just crash down in 2 days. That's how the point of volatility means. Bitcoin can just correct. I wouldn't say crash, correct itself. A pullback, whatever you want to call it. But we're 15% away from all-time high. We're still touching close to $50,000. So where is it? Yeah, 49,522. We've dropped back down under $1 trillion market cap. So only like 900 and something thousand market cap now, 922 billion. So what is interesting though, remember Bitcoin is now store of value, and let's look why. Because the pound, if we look at the pound, the US dollar is failing, they'll say. 5 days, let's look at a month. See these reds? 1 month from 0.73 all the way to 0.71. In 1 year, you can see this peak here in 86 cents on 20th of March, all the way to now. You can see this drop. And is it because they're printing money? Is it the economy? Part of this is because of COVID, businesses closing, the less spending in the economy, the less you are demanding that currency because you're not using it. There's no demand for it. No one's shopping. That's why more spending needs to happen for places, economy to do better and stuff. So that's why some try to print money because they think, okay, there's more money, more demand, more people be paying around, more transition in the economy, more people be spending more taxes, more money for the government, and the money can keep circling. The economic cycle can keep going round. But again, if you make so much supply for something, then you make it worthless as well. Then let's look. We've got so the Naira as well, Naira against the pound, we can see in 5 days. So in 1 month, see it's dropping. In 1 year, you could have got 0.0023 last year, now only 0.0019. We can see in 5 years. Yeah, but the thing with America one as well, so even America one, if you go in 5 years, it doesn't look that bad. So in 5 years, we can see it's volatile, but it has its cycles of up and down. So hopefully, if they're lucky, this is the smallest it's been in the last 5 years. So will it, where it's gone to 0.68 in 2016? So are we at the bottom? Is America going back? Or are more people going to be turning to Bitcoin and crypto because it's not storing value? Is it going to carry on a downtrend? We can see in Jamaican dollar, we've got in 1 month, it's going down in 1 year, going down in 5 years, going down. What have we got? Now, they say the top 10 coins to invest in actually is, we've got the Swiss Franc, and we can see the Swiss Franc here. So in 5 days, you can see it's less volatile in 1 month actually. So 1 month is going slightly down, 0.82 you could have got for 1 Swiss Franc. 82 pence. Now you can only get 78 pence. But in 1 year, so it was at 0.79 last year, and it's still at 0.78 now. So that's why it's storing value, kind of. Well, it is, and that's the point. Even it's an increase. So at the start of 2016, 5 years, it was 0.71. Now it's at 0.78. So that's why we're saying Swiss Franc, because this is all about, some people want to invest. It's all about where can you invest your money to make it store value or make you money. Because if you're leaving it in the banks, and if we look at banks, where's my bank one? This is what banks are offering you right now. 0.6%, 0.5%, 0.5000, all these 0.5. If you do the maths and you put £1,000 in there and you times that by multiply of 1.00057 and see what you get in a year, it's going to be very, very small. Should we see? So you put £1,000 in the bank, 1,000 times 1.0057, and you would have got back £5 in a year. So with £1,000, you would have got back £5 in a year. This is why people look, that's why risk versus reward curve, we can see risk versus reward curve, banks are one of the smallest places on the curve to be able to get money. Let's look at a nice image. So here you got banks and stuff of very small risks, so low rewards, bonds, higher risk, low rewards. But here we got stocks. That's why people go into stock market and things like that and look at dividend yields and be able to get yield from companies and calculate their yield. I think I got some things about yield. Let's have a look. Yeah, and this is why many people turn onto yield farming on DeFi. Because this is the great thing with yield farming, where you can provide, be a lender, put money into the DeFi platforms here, deposit your crypto assets, the DeFi platform like Compound, Avar and other ones, then provide money for the borrower through smart contracts and liquid and things, and then you get back a yield, a dividend yield. And if we look at PancakeSwap, I think I had did I have one open? So coin, I think I lost my tab. But there was one that was showing us lots and lots of, I think it's here, yeah. So look at these APYs you can get here, annual percentage yield. So this is what you can get in a year. 13% from here, 99%, 4%. And if you go to PancakeSwap, you can get some crazy yields. Remember, PancakeSwap is one of the ones that launched on Binance, from the Binance ecosystem. Uniswap used to be the biggest one in volumes, and then PancakeSwap swapped it, where you can get like 171% yield, 153%, 78%, 40%, 84%, 103%, 194%. You can see Pancake with liquidating with Band and Binance, 350%, 360%, we've seen 400%. What's this, even 949% for YF, for PancakeSwap? Is it YF and BNB? Imagine, but this has high impermanent loss as well, because it means you could put your money in and it's not the same value when you put it in. So it's volatile. So that's the risk of all these things. And of course, when you're staking or when you're farming, you're also no longer having it in your account. So we see here, yield farming is the practice of staking or lending crypto assets in order to generate higher returns or rewards in the form of additional cryptocurrency. In short, yield farming protocols incentivize liquidity providers, LP, to stake or lock up their crypto assets in a smart contract-based liquidity pool. So that's why when you put your staking in there, you'll get LPs, and then you can put those LPs to get more farming. But what happens is people are looking for the highest returns and they'll move it around to it. And that's the point of yield farming. Same with even stock market. You analyze, where would I get the most yield from? Is it from properties and I'm selling and I'm renting out my house and getting that return? Or would it be from, I look at what the company is worth when in the stock market, what's the dividend they're paying, and I calculate the dividend yield and I analyze the percentage and who give me a higher yield as well? Or is it bank accounts with their 0 points? This is where people are trying to get passive income. And this is where DeFi comes into play. But we see with staking now, staking came to solve a problem with Bitcoin. Because remember, Bitcoin, they use proof of work. And proof of work was all about computing power. The more computing power you had, the more you have a chance of the probability of solving the mathematical algorithm to be able to uncode the Bitcoin transaction, because there's all transactions happening. Who can uncode it gets paid with free Bitcoin. It's fractions, but that's the point of proof of work. The more computing power you have, the more you can help the system and be an auditor, the more you can get paid. That's how you get paid. But the problem with all that now is that with Ethereum proof of work, you have high gas fees because the miners are getting paid for how much they can mine. Yeah, so the more you put the gas fees up, the more they're gonna want to mine your ones. Because if I put my gas fee at a certain price, they'll see it and they will likely want to do my job before they do any other job. So the more money you have, the more quickly your transaction could go, but then the longer the transactions could go for the other ones, and it's not scalable is what the whole problem is. Because when we're looking at scalable is about how fast can you perform transactions. And that's why even XRP, we found out XRP, let's look, scalability. Scalability is the ability of a cryptocurrency to cope with the influx of a large number of transactions at a time. For example, Bitcoin operates smoothly at 7 transactions per second. Each cryptocurrency has its own creation time, but for Bitcoin, this process takes 10 minutes. So it takes very long. So this is the whole point of cryptocurrencies. If it wants to be involved in banks and stuff, you need it to be scalable and able to be able to do things quicker. So Ethereum's first system, they're still on Bitcoin's kind of way of where it works on proof of work. So that's why they've come with proof of stake to be able to be more scalable. So Ethereum's upgrade 2.0, also known as ETH2 or Serenity, is an upgrade to the Ethereum blockchain. The upgrade aims to enhance the speed, efficiency, and scalability of the Ethereum network so that it can process more transactions and ease bottlenecks. So this is the point. Ethereum 2.0 coming. Here's what you need to know. Free to obtain. And with Ethereum, so proof of stake now, that's about, so you could, the mining now happens on not how much computer powers you have, and because that takes a lot of electricity and things like that. And then before, people had to then sell the Bitcoin they've had to be able to pay those electricity fees, which will bring down the Bitcoin price. So that's why as well it was not good. But with proof of stake, it's an alternative to proof of work to be able to tackle inherent issues in the latter. When a transaction is initiated, the transaction data is fitted into a block with a maximum capacity of 1 megabyte and then duplicated across multiple computers or nodes on the network. The nodes are the administrative body of the blockchain and verify the legitimacy of the transactions in each block. To carry out the verification step, the nodes or miners would need to solve a computational puzzle. That's what we're talking about with Bitcoin. They had to solve a puzzle, and its probability, the more you had, more computer power you have, the more you do it. But with proof of stake, it's more of a fairer way. If you have, the more you stake, so just by staking, holding things, rather than having a computer, just by you holding things, you can become a validator of the network, and then you're able to approve things. And because you're a validator network, then you get paid the fees from when you approve things in that way. That's our proof of stake. And staking can still earn you a passive income because you just staking, you hold it there, you become a validator. Because proof of stake seeks to address this issue by attributing mining power to the proportion of coins held by a miner. This way, instead of utilizing energy to answer proof of work puzzles, a proof of stake miner is limited to mining a percentage yield. Is limited to essentially the transactions that is reflective of his or her ownership stake. For example, a miner who owns 3% of the Bitcoin available can theoretically mine only 3% of the blocks. So, and what else do we see about proof of stake? In addition to Bitcoin, Litecoin LLC also uses the proof of work method. Next, NXT is an example of cryptocurrency that uses the proof of stake. And this is Cardano as well, uses proof of stake. Polkadot uses proof of stake, and they've got another version of proof of stake. And this is all passive income. That's why many people want to get into staking or yield farming. Because if you compare it to what the banks are offering, it's very small, very, very small. But another thing we see is when to come out of this Bitcoin bubble or this Bitcoin bull run. And we can see there's 5 stages of a bull run. We got displacement, and we can see smart money. Got the displacement stage occurs when investors get into a new thing. Classic example is in the decline of federal funds rate from 6.5% in July 2000. Then you got the boom period where prices rise slowly at first following displacement, because we can see here on the chart. So there's a fake sell-off and people think it's going to be a bear trap and sell, but then it carries on going to the mania phase. And when it starts getting to euphoria, this is where we have to worry about when people start feeling really good about things and they're in big profits. And there's actually a chart that some people look here. So we can see all the time when 75% of people were in profit, but they haven't taken profit yet. This is where they started taking profit and it dropped. This is what's been happening. And even this recent drop, we can see it was at 75% of people without taking profit, lots of people in profit, and they took profit, and that could be why it dropped as well. So this is the things people watch out to see. When will this cycle end? Because this part here, when FOMO, loads of people in, you got public, people tweeting all of this. So how long would this last for? And we looked in previous videos, we're saying July and August and June, you have to be looking out because of previous hit cycles. When we got to all-time high and we doubled the previous all-time high, it was 6 months before it got to its peak in previous bull runs. So that's why if it follows what it did in 2017 and 2018, this is going to be around June, July, and then start seeing a big sell-off. So make sure you look at ways of making passive income and think about investing in yourself. So look at my book, Divine Wholeness. It's available on Amazon. Oh yeah, and I was going to say XRP. So this is the point of XRP. So with Scalability, XRP, the digital asset using the company's cross-border payment system, constantly handled 1,500 transactions per second. Moreover, it allegedly takes just around 4 seconds for payments to settle, while XRP can scale up to 50,000 TPS. So that's the point of XRP. That it could be the fastest one. Is one of the fastest and most scalable digital assets. But remember in my previous video, I talked about this court case with XRP still pending all the way to probably April, unless they come with a settlement, and we'll see what will happen with all these things. But till then, make sure you stay healthy. Check my website. Remember, it's all about playing the same game the rich do, by investing in yourself, thinking about how you can stop procrastinating, how you can take yourself as capital and make yourself better capital, thinking about how you can invest what you do have into good places to get the best dividend yields. But remember, it's not financial advice because it's risk versus reward. So look at what you have and you're willing to lose. And until then, stay healthy, and I'll see you here Mondays, Thursdays, and Fridays.